I am Alyssa Herman from Golden Triangle Agribusiness, and today I wanted to ask a question. When do you pay cash for equipment, or when should you finance the equipment? I get asked that all the time. Back during COVID, we were doing car finance for 2.3%, and it was just a no-brainer that we would finance that, because if you had cash in the bank, you could probably make a lot more out of it by buying cows or buying a property or doing something with that money rather than using it to buy a car. However, things have changed. Car loans are up over 6-7%, and depending on if it's a second-hand car, it might be closer to 12 or 13% even. So what do? Do we finance those cars, or do we pay cash for them? And I'm not just talking about cars, I'm talking about header fronts, I'm talking about chaser bins, I'm talking about cotton pickers, all of it. When interest rates are so much higher, how can we make best use of the money or the capital that we've got access to, whether that's cash or loans? I would say that if you've got plenty of equity in your property and you don't have intentions to buy something in the near future in terms of using that equity, then potentially do a business loan against your property. It will be cheaper, but it will take much longer. So equipment finance loan, you can get done in 2 days, you can get done in a week, but if you needed a business loan and you had to get letters of offers from the bank, it could take up to 4 weeks to finance something. So you'd have to pay cash for it and then do what's called a buyback, which is fine. You can do that, just takes a long time. If you don't have a lot of equity, or you're thinking about using that equity to grow in the next 12 months, then do a standalone equipment finance. It's where the loan is against the actual asset itself. That way you're not tying up your equity. It will come at a higher interest rate, but it can be done faster. And probably can be done with better structured repayments according to your cash flow. So those are my two takes on should you use cash or should you finance something. The other option you've got is that if you do finance something, say whether it's against a property or against a car itself, is that if there's usually GST when you buy a piece of equipment, in the 4th month of your loan, make a GST repayment so that you're not paying interest for the next 5 years on that GST amount when you've claimed it and it's back in your cash flow. So we structure the repayment so that it comes out about the 4th month. So you've claimed the GST, it's back in your cash flow, and then it's repaid to the bank. Saves you interest, reduces your repayments, and certainly makes sense when interest rates are as high as they are. If you've got any equipment finance funding needs, get in contact with us. We'd love to hear from you.